Hello, I'm Robert and welcome to my channel where I talk about everything automated algorithmic trading or simply algo trading. In this video I'm going to talk about specifically this last week's profits with the Oanda trading bot and what that really means overall as a whole for grid trading. But more specifically, I want to focus on just how the process works in relation to a grid bot that really isn't a grid bot per se. Now that may seem like an oxymoron, and to some degree it really is. But that is really the process of how things work overall within this bot. It's not uniform in its purchases, nor is it uniform in its profits. And that really is the critical and key component of any true grid bot. So let's start out with the short account, Cherry Blossom. What you're looking at is this week's profit. And you can see Monday I only did about $2, and today I'm only up to about $4. The rest of the week I did really over $6 per day. That is Tuesday, Wednesday, and Thursday. Now the sharp drops in the profit are the prices or the amounts that I transferred to my long account. Cheesecake. And you see those correlations directly on the chart by the sharp spikes upward. So you can see where I am funneling profits into the long account from the short account, but I'm also making profits on the long account by itself. So as you can see, I went from $130 to $160 in 1 week, or a $30 profit for this account. But that is, of course, the combination of the profits I've transferred from my short account. My goal here is to get my long account to roughly the $300 mark with the short account, so I can get a 1-to-1 ratio between the two of them for profitability. But let's move forward to some of the other details of this account. For example, the numbers of buys and sells per day. And you'll see that this account, the short account, is only 7 weeks old. Not very long for the amount of profits I've gotten out of it. And you can see the buys, the red account, and the sells, the green count, each day as the bot has done its job. This is exactly what a grid bot is supposed to do. And if we zoom in on one single week, this last week, you see the buys and sells every day of this week thus far. You can see the overall process or the overall functionality of trades that have taken place on just this one asset. Now let's compare this against the long bot that has only been running for a little over 2 weeks. And we'll zoom in on just this last week alone. And the way I have this set up, I can flip back and forth. And you can actually see the correlations and divergences between long and short positions. For example, on March 1st, the buys were more on the short bot, but the sells were more on the long bot. So we have a direct correlation between long and short trading. So now let's move to the frequency count. And this is where it tracks prices. Where is the most frequent price that the market seems to show, which will give a clue to support and resistance or supply and demand. And these zones are what really make the difference for the bot. And again, you can see different correlations between long and short, but at the same time, you can actually see some points between both of them that have a very interesting convergence versus what you would expect, which would be a divergence. So within the frequency of price action, there is a definitive pattern developing between both the long and short directions of trading. Whereas sometimes that trading is mirrored from one to the other, and other times it is opposite of each other, or opposite enough in terms of the bid-ask spread that it creates these differences in correlated patterns. And that really is one of the principal functionalities and features of looking at these kinds of statistics. So now let's move to the last chart. And this is really where we can begin to predict where price is going. And we can see how that price correlates to the actual bid-ask pricing that exists on the market. So let's start by zooming this in and getting down to the breakdown. Now this chart is only updated once a day because it takes several hours to update because of the amount of data that it clearly is able to pull in. So let's hone this in a little more. Okay, so now let's start with the bid-ask pricing. You can see that the market has been somewhat downward recently, but is really in a range to some degree. And that's the big point that speaks of the process itself. Whenever you're using this kind of a trading approach, you always want to look for the range. And if you don't see the range, then you need to look back further until you find the range. Now the black line is the highest count of frequency that shows up in this chart here. The purple line, the predicted consolidation price. This is important, not because it's trying to predict what the price is, but more because it's trying to predict where the price is going. So let's go back to the main chart, or to the whole chart. And let's take a look at the bigger picture and really see that correlation. You see that the predicted consolidated price in both charts is dropping. So what does that mean in relation to the market? Well, that means that the bot believes the market is still going to go down in value. The consolidated price is lower than the frequency count, which is important because even though the frequency count shows a very specific value that price retraces to on a regular basis, it's not necessarily the point by which the market believes is the most appropriate value or worth of this currency. And that really is a good mindset indicator in terms of what direction you want to focus on if you're not trading in both directions simultaneously. The realization of the market structure is really on the basis of statistics. And while technical indicators can give you a large amount of information, such as moving averages or volatility or other critical factors, oftentimes the best information you will get is simply by trying to analyze the market and getting a statistical deviation of price variance. And that is exactly what we are looking at here. Price variance. Where is the supply-demand zones in relation to what a full statistical analysis is going to give you? And that tells you that the relationship is lower. Price will drop lower, and price will become lower. Even though we had a good bullish run the last couple of days, the bears still control the market because overall the predicted price is still dropping and has been for quite a while, at least a month now. So the USD Euro combination, or I should say Euro USD combination, is still overvalued by the supply and demand zones of the market. Now that doesn't mean that you're not going to get profits if you go against the market or if you try to use an opposition methodology like what I am using. Because as you can see from the profits, that is just not the case. You are going to see clearly profits being made. Even without the deposits, you can clearly see exactly where profits are coming in from just trading by itself. So there is really a very concerted effort in opposition trading that makes for the case of trading both directions simultaneously using two different accounts. And that really is the forefront of the discussion that needs to take place when you're looking at this kind of an approach. You need to be able to look at your exposure, the blue line, or I should say the red line, excuse me. The equity is how much you have taking off your exposure. The red line, margin used, that's how much is in the market at that moment and what you could potentially lose. And of course, when you look at the long account, same thing. In the market, what could you potentially lose? And you can tell by looking at the equity and the margin that right now the market is moving in more of a cumulative direction for moving downwards versus upwards. It's a little of both. If the price was climbing, which it is at this point, you could see the margin isn't as much as it was. So price is climbing, so you see that the margin is increasing here. Although, as you can see from the later points of the market, it is actually going down a little bit. Again, things are ramping down. For me, the market closes in about 2 hours for the weekend. So that context shows you just how little time is left. And exactly what the market is doing. So Friday afternoon, people are getting ready to call it for the weekend, and the market is showing it now. And that is really the point that you want to take away. Each day is going to have its own unique functions or functionalities. And when you are trading in both directions, you will see that clearly as you trade. So you want to be aware that when you use any kind of statistical analysis, take a careful look at all of the data presented, because the one thing that stands out is you may not know what data you need until you need it. And that really is the biggest highlight of all of these charts. Some things are obvious. Some things really aren't. For example, when I first put this chart up, I wasn't sure how valuable it was going to be. But now, after a couple of days of studying it and seeing its correlative significance within the trading markets, it has become quite a bit more valuable than I anticipated. And having that information along with the predicted price information really gives me an idea of what next week is going to be. And I expect next week to be more of the same of this week. That aspect of trading isn't necessarily a prediction of price, but rather a prediction of direction. And based upon the current information over the course of this week, I expect at least Monday to show more of a downward direction. So hopefully this will help explain in better detail exactly what I look for when I am trading, and more specifically what information is used in determining the success of profitability within this spot, and why it is actually so successful. Leave any questions in the comments below or on the support server, and I'll be glad to answer them. If you found this video helpful, please like it, and if you're not subscribed, please subscribe to the channel. Thank you for watching, and until next time.